I want you to imagine, just for a second, that you're running a manufacturing business
Oh,
and you've hit a really tough quarter.
right.
The actual physical amount of product you're able to manufacture and put on the shelves, well, it drops. Your factory floor is struggling and your output is noticeably down.
Yeah, which in a normal world means you'd be bracing for a brutal financial report.
Exactly. You'd be preparing to deliver some really bad news to your investors.
Yeah.
But instead, your profits somehow shoot up by over 70%.
Oh.
You are making more money than you ever have in the entire history of your company, all while, producing less actual product.
I mean, that sounds like a massive accounting error or maybe outright fraud.
Right. But in the world of global commodities, it is very real. That impossible scenario isn't just hypothetical.
No, it's not.
It is exactly what is happening in the Q2 2026 earnings report for Southern Copper Corporation. So today, our mission is to unpack the fascinating mechanics of a global commodity giant. We're going to explore how they can hit record-breaking profits even when the physical production of their core product is dropping.
And we also really need to look at what their multi-billion-dollar project pipeline reveals about, well, the geopolitical realities of modern mining.
Exactly.
Mhm.
Because when you analyze a company operating at this massive scale, the quarterly report it ceases to be just a financial document.
Right. It's more like a real-time barometer for the global economy.
Yeah.
You start to see the stress fractures in international supply chains and, the intense friction between industrial ambition and the actual on-the-ground realities.
So let's jump straight into this central paradox, right?
Yeah.
Because the headline numbers for Southern Copper's second quarter of 2026 are just staggering.
They really are.
They posted record Q2 net sales of $4,289.0 million.
Which is, I mean, that's a 40.6% increase over the exact same quarter last year.
Yeah, almost $4.3 billion. And their net income hit a record high of $1,670.0 million.
Up an astonishing 71.6% year over year.
Right. And they're operating with a massive net income margin of 38.9%.
I mean, those are margins that software companies dream about.
Yeah.
To see that in heavy industrial mining where your primary activity is literally blasting rock and hauling dirt, it's almost unheard of.
But then you look at the physical reality of their mines and it tells a completely different story.
Right, the actual copper production.
Exactly. It dropped by 3.5% quarter over quarter down to just over 230,000 tons.
Yeah, and the report notes this was primarily driven by a 12.0% production drop at their Peruvian mines.
Right, specifically due to lower ore grades.
Though I think that was slightly offset by a small 3.2% rise in their Mexican operations.
Yeah, but overall production is down. So this is where we really need to understand what lower ore grade actually means in practice, right?
Right, because it dictates the entire physical operation. Look, when you mine copper, you aren't just, digging up pure chunks of shiny metal. You're digging up rock that contains tiny fractional percentages of copper. So if an ore grade drops from, say, 1% to 0.5%.
Which doesn't sound like a lot.
Right, it doesn't. But it means you suddenly have to drill, blast, haul, and process literally twice as much physical rock just to get the exact same amount of copper.
So you're burning more diesel, you're running those massive house-size haul trucks way longer.
Yep.
You're stressing the equipment more, your physical effort goes way up, but your actual yield of metal goes down.
Exactly. So your operational costs in Peru are fundamentally rising because you are moving more waste rock. You're doing way more work to get less copper out of the ground.
It kind of reminds me of a farmer whose harvest is cut short by bad soil.
Yeah.
Like they simply have fewer crops to take to market.
That's a good analogy.
But if a global food shortage hits at the exact same time, the market price of whatever crops they did manage to harvest goes through the roof.
Right.
The macroeconomic environment completely bails out the local operational failure.
That analogy hits the nail on the head. I mean, Southern Copper is extracting less volume, but they are reaping a massive windfall purely due to macroeconomic pricing trends.
The secret behind the paradox of selling less but making more is just exploding metal prices.
Across the board.
Like, according to the report, the London Metal Exchange price for copper was up 39.8% compared to the previous year.
Which is huge.
But the real story isn't just copper. I mean, silver surged an incredible 118.6%.
Yeah.
Molybdenum was up 43.1%. Zinc jumped 30.8%.
And this just illustrates a fundamental truth of the mining industry. You can employ the best geologists on Earth. You can run the most efficient operation in human history. But
Oh,
ultimately,
yeah, at the absolute mercy of the market.
exactly, you are highly leveraged to commodity cycles. If global copper prices tank, your 38.9% margin vanishes overnight, no matter how hard you work.
Sure.
But conversely, when prices surge this violently, and not just for your primary metal, but for every other metal you happen to scrape out of the dirt, it completely overrides the fact that your ore grades are falling.
It's wild.
Yeah.
But you can't really fully grasp how insane that margin is until you look at the other side of the ledger.
Expenses.
Yeah, we need to talk about their expenses.
Yeah.
Because I read a line in this report regarding their extraction cost that genuinely made me think there was a typo.
Ah, you're talking about the operating cash cost.
Yes, the operating cash cost per pound of copper in Q2 2026 was reported at just 5 cents.
5 cents.
$0.05. That is a 93% decrease from the 63 cents they reported just 1 year ago in Q2 of 2025.
It's unbelievable.
And wait, it gets even wilder. If you zoom out to the first 6 months of 2026 as a whole, their operating cash cost was literally negative.
Yeah.
Negative 3 cents per pound.
Yep.
Wait, let's unpack this right here. I need you to explain this because it sounds impossible.
Mm-hmm.
How can it cost negative 3 cents to dig a pound of copper out of the earth?
I know, it sounds...
Are they
but
magically being paid to mine? Like, how does that work?
it definitely looks like magic or a typo to anyone outside the industry, but it relies on a very standard accounting mechanism called byproduct revenue credits.
Okay, byproduct revenue credit.
Right. To understand how that works, you have to look at the geology of these specific mines.
Walk me through it.
So when Southern Copper blasts a wall of rock in their pit, they aren't selectively mining just copper.
Right.
The geology is complex. Other valuable metals like silver, zinc, and molybdenum are baked right into that exact same matrix of rock. You have no choice but to extract them all simultaneously.
Okay.
Now, Southern Copper considers itself a copper company. Copper is their core identity. So from an accounting perspective, they take the revenue they generate from selling all those other secondary metals.
The byproducts.
Exactly. And they subtract that revenue directly from the cost of running the copper mine.
Oh, wow. Okay, I see the math now. Because the prices of those byproducts were so astronomically high, like silver jumping nearly 119%.
Yeah.
The revenue from selling them was so huge, it essentially paid for the entire cost of the copper mining operation.
Exactly. The byproduct revenue entirely swallowed the copper extraction costs. In Q2 alone, those byproduct revenue credits increased by 51.4%.
That's just crazy. It's a mathematical miracle driven entirely by macro market pricing.
Yep. It has nothing to do with operational efficiency or digging up more metal. In fact, they physically dug up less of almost everything.
So, okay, if you are generating record sales and netting record income and your operating cash cost for your main product is mathematically negative thanks to silver prices.
You are absolutely flush with cash.
Right.
Their adjusted EBITDA was $2.85 billion for the quarter alone.
Which begs the obvious next question. Where are they putting all this money? You can't just leave $3 billion sitting in a corporate checking account.
No, you can't. And this transition from the financial side back to the physical reality is where the story gets really compelling.
Yeah.
They are funneling it into a massive capital investment program for this decade. We are talking about a pipeline of over $20.5 billion.
That is a staggering amount of capital.
It is, and they're splitting it between the two main jurisdictions, $10.3 billion in Peru and $10.2 billion in Mexico.
The financing details behind this pipeline are actually fascinating, too. In June 2026, they issued a $1.25 billion 10-year bond.
Right, at a 5.35% interest rate.
Yeah, and their earnings report explicitly states that those bond proceeds will be used exclusively to fund the Tia Maria project in Peru.
Tia Maria is their flagship growth engine right now.
Yeah.
The report notes it's currently 42% complete.
And they expect it to start producing 120,000 tons of copper starting in 2027, right?
Exactly. And they have other major projects lined up too, like Michicale in Peru starting in 2032 and El Pilar in Mexico starting in 2029.
Okay, so they have the billions in funding, they have the bond secured, the projects are lined up. But when you read the fine print on some of their other major projects, it's clear that it's not just about the money.
No, it's really not.
There's a massive vulnerability here. Despite having billions of dollars in world-class engineering, the company is entirely at the mercy of outside forces.
Oh, absolutely. Look at the Los Chancas project in Peru.
Oh.
The report explicitly states it is currently hindered by the presence of illegal miners within the project area.
They essentially have squatters on their land.
Right, and the report notes this is happening despite the state's on-site enforcement efforts.
And the roadblocks aren't just limited to illegal occupations in Peru. In Mexico, they have the El Arco project, but that project is completely stalled.
Stalled waiting for the government.
Yes, specifically the CFE, the Mexican government's Federal Electricity Commission. They're waiting for them to connect the Baja California Peninsula to the national electric grid.
This really connects the dots to the bigger picture of modern mining. Because verifying the geological reserves and securing the financing,
That's only half the battle.
it really is. The real bottleneck is infrastructure and local governance. You can model your ore grades perfectly, but you cannot model a state-run power grid timeline or, figure out how to easily clear out entrenched illegal miners.
Which provides incredible context for a specific quote from Chairman German Lorea in this report. He specifically noted that the company is, quote, encouraged by the initial statements made by President-elect Mrs. Keiko Fujimori.
Right.
And he reiterated their commitment to working with the incoming administration. And, just as a reminder, we are delivering this quote completely impartially. We aren't endorsing any political figure or side here.
Of course not.
But it just emphasizes that mining success relies completely on government cooperation. If the federal government isn't aligned with your development goals, your multi-billion-dollar project is stuck.
Exactly. But relying on the federal government is only one layer of the political risk. Because given that local politics and community pushback, like those illegal miners, can stall these billion-dollar projects indefinitely, you have to look at how Southern Copper is actively trying to buy goodwill.
Right, securing their social license to operate.
Yes, the ESG equation, environmental, social, and corporate governance.
Yeah, the report goes into a lot of detail here. In Peru, they highlighted the Culajahura Dam. They built it with the state in Candareva, and it has provided year-round water to 18% of local farmers.
Which is huge in an arid region.
Yeah, it boosted crop yields by 20%. And they plan to build more dams to eventually cover 90% of the farmers' needs.
And they're executing a similar strategy in Mexico, but focused heavily on education and youth.
Right.
They detail operating 11 education centers, specifically pointing out that local students from these centers are winning math and science Olympics.
They've also organized these massive sports programs covering 41% of the youth population near their Mexican operations.
Yeah, funding 206 teams.
And creating community murals to strengthen the social fabric. And, when you read this, it's obvious these ESG initiatives aren't just feel-good charity.
No, not at all.
They are high ROI risk management.
Yeah.
I mean, if you build a local dam and fund the local kids' sports teams, the community is much less likely to blockade your billion-dollar mine.
I completely agree. Sustainable mining operations require treating the local community as key stakeholders, not just neighbors. If you don't actively maintain that social fabric, the economic engine of the mine will just be forced to stop.
So, tying this all back together, we've got this incredible quarter, record-smashing sales and net income.
Yep.
Copper that mathematically costs 5 cents a pound to extract, thanks to sky-high byproduct prices.
And that massive pipeline of projects racing against falling ore grades and political hurdles.
Right. And for the listener, all this translates to a massive payday for investors.
A huge payday.
The board authorized a $1.10 cash dividend plus a stock dividend. And based on the July 2026 share price of $177.32, that brings the total estimated dividend to a whopping $3.23 per share.
Which is just a phenomenal return.
It really is. But it leaves you with a final kind of lingering question to mull over. As the world's demand for copper skyrockets to build electric vehicles and renewable energy grids, and as ore grades naturally continue to decline, will the mining industry's future be decided by geological engineering, or will it ultimately be decided by their ability to navigate local community politics and international power grids?